Welcome to Market Insights, the first one of 2022. So we're going to call this one the next 60 days. Let's get going. In this issue, we're going to talk a little bit about the drought premium, the 2022 grain sales that are going to be coming up here sooner than we know it. And of course, we got to look a little bit about the canola crush margins to see what's going on with those so we can kind of plan ahead. What do I think is going to be happening here in the next 60 days? I think we're going to see the market drift a lot, and I still think we're going to see a lot of volatility, which means there's still going to be opportunity in pricing grain if we've missed some of the opportunities that we saw a couple weeks ago. So, and of course, we're still dealing with this drought premium. However, as we continue down this path, the drought premium becomes less and less of an issue, and we start looking at the new crop. So that's what we're dealing with. And why does this matter to you? Obviously, we're still dealing a little bit of the La Nina crop here, or La Nina weather patterns. It's supposed to be wrap up by spring sometime. That's what I read. And there's both potentials, huge potentials for a huge drop or huge rally, depending on the crop, of course. But if we get rain both in Canada and the U.S., obviously we know the thing's going to drop. It could easily be up to 30%. This could be a huge one. The rally, I don't know how much of a rally the canola would have. The wheat definitely could have a big rally, especially if it's dry in the Midwest down in the States. So we're entering this time of extreme uncertainty, which makes it really, really hard for you guys to market your grain effectively if you haven't already done so already. So of course this is nothing new to you guys, you know, waiting on weather, of course, right? So that's what we're dealing with. So we want to look at this 2022 crop pricing opportunities, right? We know that regardless of what happens, there's probably going to be a big change in the market. And pricing this is going to be a tough gig right now. Obviously what happened last year, nobody wants to sell nothing. But the price is real good. So how do we determine whether it's a good price or not? We got to evaluate, is this price in the fall a good price or not? And if it is, we have to kind of look at that. Say canola, for example, it's $18. That's a good price traditionally for off the combine. In fact, I don't think anyone's ever sold that before, besides last year. So then we got to look at that. Obviously, our costs have gone up, but what if our projected margins at $18? They're going to be pretty good. Obviously, all the inputs have gone up significantly, but you're still going to be making good money at 18 if we get a normal crop. We just got to evaluate that. And so one of the management decisions you guys have to make on the farm, sit down with the pencil and just kind of figure out how much do you want to sell. Obviously, last year was, hopefully it's 1 in 20 or 30 year drought. We don't see that again, but maybe we do. So maybe we don't get as aggressive with the sales. But we still should do something, right? And remember, it's always okay to sell nothing. Don't get caught up in this whole elevator told me if I don't book it today, I'm never going to get a spot. I mean, that's not the case. There's so much elevator capacity out there right now. I don't think we're ever going to see those days again unless the trains fall apart, but then you're not going to move it anyways. So let's just take a quick look at the chart, the canola crush margins. We've looked at this before. Since January 1st, the canola crush margins have dropped drastically. They were actually at positive $100 last year this time. Now they're at a negative $100. So you really don't want to be a canola crusher right now or anybody dealing with canola. But thankfully, the crush margins have narrowed. We're going to look at that a little bit bigger here. So as you can see, bigger picture, way down on November, it started to stabilize at minus 100, and it looks like it's starting to creep back up a little bit here. So hopefully we start seeing these margins increase a little bit. We've got to have the crushers making money or it's not good for anybody. The minute there's a new crop coming down the pipes, the crushers know that. I expect their basis levels to widen way out. That's just the way it works. So that's what we're dealing with right now. So that's this quick edition of Market Insights. Obviously there's a disclaimer like you've all seen before. And if you guys are looking to upgrade your grain marketing again, we're still offering lots of products here. We've got some new ones. The Grain Navigator is great for the farmer who just wants to read newsletters, high quality, of course. And that's a good deal. You sign up for that, and then you can also click there, and you can see the other programs I offer. There's some really great ones there, some sounding board ones, which I think is really valuable to a lot of you guys. So thanks a lot for spending those few minutes with me, and we'll talk again later.